Why are some of the biggest investment opportunities hidden away from the public eye? And how are under-the-radar companies like the leaders in private credit challenging traditional giants and delivering returns that few are enjoying? In the world of 2024, as public markets wobble with volatility, a quiet movement is happening in the financial shadows. What's really behind the growing interest in private credit? And why can it be the key to a successful strategy when everything around you seems uncertain? Now, imagine having access to assets that, while banks close their doors, offer stability and innovation in a single package. How are these companies shaping the future of finance? And how can you position yourself to capture these opportunities before everyone else finds out? The private credit market is standing out as one of the most promising avenues for investors in 2024. Companies such as Apollo Global Management and Blackstone lead this industry, offering attractive opportunities for those seeking risk-adjusted returns. Private credit thrives on uncertainty, filling gaps left by traditional banks, especially in times of volatility in public markets. Apollo, for example, is known for its focus on high-quality bonds and collateralized loans, offering consistency and security for investors who want to protect their capital while also taking advantage of growth opportunities. Moreover, the appeal of private credit lies not only in the robust returns, but in the diversification it offers. Companies like KKR are expanding their focus to more resilient assets, especially in times of economic downturn. With a long-term approach, KKR stands out for investing in companies that have consistent cash flows, providing an extra layer of security for investors. The flexible structure of private credit also allows loans to be personalized, which is a significant advantage compared to the stricter public markets. This attracts companies seeking alternatives to traditional banks, creating unique opportunities for attentive investors. Another point that makes private credit attractive is its resilience in times of crisis. While public markets may suffer sharp declines, companies such as Ares Management ensure stability with a focus on corporate credit, real estate, and infrastructure. This solidity, especially in periods of volatility, makes American investors increasingly interested in increasing their allocations in this sector. The ability of these companies to provide flexible financing for a variety of industries makes them attractive options for those seeking both security and innovation. In addition, the growth of private credit is also in line with the growing demand for sustainable and ESG-focused environmental, social, and governance investments. Companies that follow these principles are attracting even more interest from conscious investors. The industry is well positioned to capture these capital flows, providing not only financial returns but also positive social impact. This makes private credit an increasingly strategic choice for those looking to diversify their portfolio and at the same time, contribute to a more sustainable future. In short, companies such as Apollo, Blackstone, KKR, and Ares are leading the transformation of private credit into one of the most attractive sectors for global investors. With the combination of stability, innovation, and alignment with ESG principles, this market offers a unique opportunity for growth and capital protection, especially in times of economic uncertainty. So, what does the future hold for private credit? Will it continue to challenge traditional giants and offer returns that few are realizing? Or are we just scratching the surface of what's to come? And more importantly, how will you position yourself in the face of these opportunities before the rest of the market wakes up to them? What is yet to be revealed behind the financial scenes? As the global landscape changes, the real question is, are you ready to explore one of the best-kept secrets in the investment world?